micro SMEs could be among the biggest winners from Singapore's move to allow digital banks. They're among the groups that are currently underserved by traditional banks, and others include foreign workers.
Overall, lower operating costs for digital banks could also mean savings being passed on to customers. Last Friday, the Monetary Authority of Singapore announced that it will issue up to 5 digital bank licenses, allowing non-bank players into the scene. Michelle Teo with more.
Opening a bank account or applying for a loan without going to a physical branch. Well, you can do that with digital banks. Besides convenience, digital banks can also reach out to the unmet or underserved market segments.
A digital bank is able to help even the micro SMEs, the startups, to thrive in an industry that is usually traditional banks do not want to touch them. So for example, the mom and pop shops, where they do not have accounting systems, they may not have even bank accounts. That's where digital banks come in. I believe everyone has a mobile phone. These micro SME owners, they are able to have a bank account just by onboarding without having a solid reputation of credit history, credit record.
For customers, this could also mean more product innovation.
For example, micro pensions for foreign domestic workers and foreign construction workers, or a micro savings and insurance product for those people. Credit for those people who are working in informal sector or gig economy sector because they do not have a formal pay slip.
Consumers can look forward to more innovative products and delivery channels. There could also be opportunities for lower cost products and possibly some savings that may be transferred to consumers in the form of maybe higher interest rates, better returns on their investments.
Analysts say fintech companies can also work with traditional qualifying full banks or QFBs to offer services that rival that of digital banks.
The existing QFBs and banks can create a new venture wherein the non-banking partner could own a minority share with only 100 million capital, because this will be connected still to the main bank. So that internet-only bank, IOBs, that's another category which is to be looked at, where financial institutions could use that as a route as well.
However, challenges remain. Singapore's small market size will mean digital banks need to ensure the portability of customer data, given the consumer demand for such services.
Consumers are more likely to use digital channels if banks can offer better data security, attractive user interfaces that offer seamless logins and multiple functionalities, as well as real-time problem resolution. So these are hygiene factors that digital banks need to offer in order to win the customer's trust.
The authorities expect to invite the digital bank applications in August, when it will also provide more details on eligibility and admission criteria.